Today I want to talk about the giant short squeeze that was recently ruined by these market makers, by these hedge funds and by FINRA. I want to talk about what happened, how they halted the squeeze and what shareholders are currently doing about it. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So I recently touched on this a few days ago when FINRA just halted all trading on MMTLP for an extraordinary halt, with a statement that it will no longer allow trading until the symbol is delisted. As I said, I touched on this a few days ago, but I want to expand on it in my video today because it's such fraudulent action by FINRA to protect these short sellers. So Charles Payne actually interviewed the previous CEO and they perfectly explained exactly what happened on the lead up to what should have been a guaranteed squeeze.
Retail investors sounding the alarm big time all weekend long, going after the Financial Industry Authority, FINRA, for halting its shares in a preferred stock of Meta Metals. And so we want to get into what happened. Why is this such a big deal? Here to help us out is former Torchlight Energy CEO John Berta, whose company was taken over, if you will, or at least the symbol was by Meta Metals. And John, you and I spoke earlier on the phone. It's a tough one to hash out in just 3.5, 4 minutes. But let's get to the crux of the issue here. Explain what happened for the audience who may not know what's going on.
Sure. Well, Charles, thank you for having me on, and I appreciate you giving us this time. Back in June of 2021, we concluded a merger with Meta Materials, and as part of the business arrangement for that transaction, we were to issue a Series A preferred share that was to be non-tradable for all of our Torchlight shareholders of record on the dividend date, on the record date. And we closed that transaction and issued 165 million shares to those shareholders of record. And we went about closing the transaction, and Meta changed their ticker symbol to MMAT, and now they're on the NASDAQ and going about their business. Fast forward about 4 months, and after kind of doing some investigation on whether or not the entire short positions were closed out, we found out that that truly didn't happen. And then two market makers got together, went to FINRA, went to OTC markets, and started trading the Series A preferred as MMTLP, or Meta Materials Preferred. And they did so with fraudulent information on OTC markets. And when I found out about it personally, because they were using my information, I called OTC markets and was advised at that time that FINRA approved it. Two market makers got together and listed it without company input and without the issuer knowing, and they went ahead and allowed it, and decided at that point they were going to do nothing. And so that's
John. This was not the company had nothing to do with this. Two market makers said, "Hey, we want this to trade." FINRA said, "Okay, we'll trade."
So I think Charles Payne, the previous CEO, perfectly explained it there. This MMTLP was given to shareholders as a preferred share dividend and shouldn't have ever been traded. But then seemingly two market makers, 10 points to whoever guesses who those are, went to FINRA and said, "We demand to trade this preferred share." FINRA obviously completely bent over backwards and said, "Yeah, that's absolutely fine. We will allow you to illegally trade this share that should not be traded." That obviously then given the ability to synthetically short this stock downwards, generating hundreds of millions, if not billions of dollars in profits that they never have to recognise as they never have to close out of their positions. But then when the MMTLP stock was set to be delisted, instead of these shorts closing out of their short positions, FINRA decided to halt all trading in the stock, allowing shorts to never actually close and the symbol to simply be deleted. As Jan Jack tweeted, he said two market makers basically hijacked a non-tradable Series A preferred share of MMAT awarded to shareholders as a dividend and decided to illegally trade them in the OTC market without the company's approval. Even though they didn't get the company's approval, they somehow got the approval of FINRA, the DTCC and the New York Stock Exchange. But then when the time came for these shorts to close out of their positions, FINRA stepped in and said, "Hey guys, we're going to halt all trading on the stock and determine it an extraordinary event. Instead of forcing these shorts to close, we're going to stop all trading and delete the symbol instead." If you didn't already know, you can currently get 20 free shares worth up to $2,000 each when you sign up for Moomoo right now using the link in the description below. Moomoo is also holding their largest ever giveaway for the holiday period, currently holding a $60,000 giveaway sweepstake. As Edward Burchuk tweeted, he said FINRA committed crime with 2 market makers, approving them to front-run MMAT preferred shares that shouldn't be trading. Those 2 market makers, let me guess, Citadel Securities and Virtue Financial by any chance. Now I want to explain why this is important and why shorts can't continue to get away with this. As Genevieve tweeted, she said last week, FINRA halted trading in a stock just before a spin-off. #FINRA fraud started trending and short sellers were saved from billions of dollars in losses. Now this is important because the MMTLP stock ran from $1.50 all the way to $10 at the very tippy top. Now obviously that's definitely not the true potential of a short squeeze, because in this instance, shorts never closed out of any of their short positions. FINRA just deleted the symbol and halted all trading. Instead, these shorts decided to double, triple and quadruple down and push the stock all the way from $10 per share back down to $2.90. They must have printed hundreds of millions, if not billions of synthetic shares, and obviously doubled, tripled and quadrupled down on their short positions in order to push the stock price back down. But obviously they weren't worried because they knew that they could convince FINRA to allow them not to close out of their short positions and simply to halt all of the trading and delete the symbol. Now I want to step in here and specify this is not what will happen to AMC. AMC, the symbol, obviously won't be delisted, as AMC isn't spinning off or spinning out and isn't closing down the AMC business. Shorts will be forced to close out of their positions because they won't be able to convince FINRA to suspend all trading indefinitely, as AMC as a company will survive and will continue trading under the AMC name. You could argue that when APE converts into AMC shares, the APE stock could potentially be suspended indefinitely and deleted, but at the same time would be given more AMC shares, so it wouldn't matter about APE being deleted in this instance. However, I do think it's absolutely criminal that what should have been a guaranteed short squeeze was halted in the final few days before the stock was delisted. Obviously, as the MMTLP stock or the dividend was spinning off and going private, or the dividend specifically was ceasing to trade, it should have meant that all shorts were forced to close out of their short positions. Obviously, these shorts can't continue to hold a publicly traded short position in a privately traded entity, and therefore all shorts should have closed. But simply FINRA allowed them to continue holding their short positions and continue creating synthetic shares, and they simply suspended all trading and deleted the ticker symbol instead. Obviously, if instead the shorts were forced to close out of all of their short positions, this stock would have likely ran to $30, $100, $300 or maybe even higher, depending on how many synthetics were created. Obviously, it's hard to say exactly how high this stock would have run with all of the synthetic shares because I don't know how many synthetics actually existed. But considering it ran all the way from $1.50 up to $10 without any shorts closing any of their positions because they knew they'd have FINRA on side, one can only imagine how high it would have gone. Now, Houston Wade actually made a brilliant video explaining exactly what these hedge funds should have done, what they did, and what FINRA did as a result. Obviously, what these hedge funds and market makers should have done is buy up real shares to cover off their synthetics, or simply buy back all of those synthetics and delete them from existence and close out of their short position. But obviously what they said was to continue shorting the stock, continue creating the synthetics. Even though they knew the stock was going to be delisted, they continued to double, triple and quadruple down on their short positions. Now this obviously goes against FINRA's rules. They should have closed out of their shorts when a stock is going to be delisted, but instead they took out more shorts instead of closing out of those shorts. Now FINRA obviously looked and realised there needed to be hundreds of millions if not billions of short positions closed on the exact same day, which would have squeezed the stock, generating hundreds of millions if not billions of dollars for the shareholders and investors. Therefore, instead of FINRA protecting the shareholders and the investors, they decided to protect these short hedge funds and these market makers, not doing their duty as a regulator and protecting investors and shareholders. They were instead protecting the hedge funds. Obviously, I'll leave the link to this tweet and to Houston's video down in the description below if you want to check it out further. But there is a reason as to why this manipulation won't continue for much longer, and that's because the market is still crashing and crypto is about to crash even further. As Bitfinex tweeted, they said Binance is now offering 50% APR interest on those Tether fraud tokens. Now, typically when an exchange offers giant interest rates, it's because they're desperate to get cash in the door and they're likely already insolvent. They said Binance appears to be desperately attempting to increase deposits. First cloud mining scams, now 50% APR interest rates on Tether fraud tokens. Now usually you see those really sketchy exchanges offering 50 or 100% APR, but now you've even got Binance of all exchanges offering giant interest rates, clearly desperate for deposits. Because as Gold Telegraph tweeted, Binance customer withdrawals yesterday exceeded $3 billion in 24 hours. Clearly customers are panicking and withdrawing their cash from Binance and withdrawing their crypto because they know that Binance is insolvent. And if anything, Binance offering a giant 50% interest rate just simply proves exactly that. If you haven't already done as I said last year and sold off your crypto, or at least withdrew your crypto off exchanges, I really urge you to do it now. Obviously guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.